Hello, everybody, and welcome back to the Loan Officer at Wealth podcast. We are blessed with Ray Sclafani today. Ray, welcome to the show.
Hey, thanks, Chris. Good to be here with you.
So, this is a very special episode for us because Ray is, and I don't want to go too much into detail, but runs a very large coaching organization in the wealth management space. So, he is with wealth managers all day, every day, helping them grow impactful businesses. And today's conversation is going to be about how to grow your business because Ray is just incredibly talented at that, but also the relationship between financial services and the mortgage industry and how we can leverage and better serve our customers as a result of that. So again, Ray, thank you so much for being here.
My pleasure.
So before we get into the actual nitty gritty, could you give us a little bit about your background? How did you start the coaching company? How did you get into it? And how have you gotten to be where you are today?
Oh, that's great. So I began in the financial services industry working for a large asset manager. I was in the field calling on financial advisors and selling them asset management services, and rose the ranks and transitioned into leadership. And I hit 20 years with this particular asset manager and wanted to make a difference in a different way. I enjoyed the impact of the coaching and developing of the advisors in their businesses more than I enjoyed the capital markets and investment management side of things. And so took a risk, wanted to move from executive to entrepreneur. And I founded Clientwise in January of 2006. So we're coming up on a 17-year anniversary here in January. And today I lead a team as a founder and CEO of 23 coaches, a core team of another 20 or so, and a firm that continues to grow, coaching mostly financial advisors in the US, although we do have clients in Canada and Australia as well, as those markets are very similar to the US market from a financial advising perspective.
That is amazing. Well, congratulations on the incredible success thus far.
Well, thanks.
So I know you also have a book out, and so you've been framed has well, I guess an incredible concept inside of it about how both mortgage professionals and wealth planners should be looking at their business. Would you mind kind of unpacking that concept for our listeners about?
Sure. Yeah, sure. So this idea of framing is a concept that I learned when I went through my master's certification in neurolinguistics,
Oh,
which is
wow.
really about the study of human communication. You know, we all have a brain, two lobes separated by a corpus callosum, yet we have different belief systems and belief structures, ways with which we communicate, the language, the rhythm, the timbre of our voices. All of that kind of plays into what neurolinguistics is about. This concept of framing is really interesting. It's something that got my attention many, many years ago. We all get framed a little bit. We get known in a particular way. We've got a personal brand, maybe a company brand, maybe an industry brand. And I talk about this in my book as it relates to financial professionals, specifically financial advisors. And so the question is, how do you want to be framed if you believe as a journey learner, as a lifetime learner, that things are always evolving, we're always acquiring new skills and capabilities, our industry or our profession is evolving, you know, and you're in tune with that evolution and you're clear where you want to be framed 3 years from now. What are the behaviors, the actions, the communication that you need to start adapting today to further advance that move toward how you wish to be framed? So if you're a loan officer, you're a solo producer, and you want to be framed as part of a team and adding value, maybe less transactionally and more from a consulting perspective, well, that's an evolution. And so you want to think about what your behaviors are, what your language is, how you go to market, and move toward quickly how you wish to be framed.
Hmm.
I always ask our clients, add 3 years to your age, and how do you wish to be framed at that age, 3 years from now, individually, professionally, personally, et cetera. So that's that concept of you've been framed, how to reframe yourself and renew relationships.
That's incredibly powerful. And I think so many people are looking at, let's just take social media content as an example, but there's so many things you can publish, you can do all kinds of amazing things. But if you look at your social media content and everybody's just trying to think about like, well, what do I post today? And having that mindset of in 3 years, I want to be here. And what does the vision and message need to be today in order to get
That's
there?
right. Start posting that now.
That's incredibly powerful. And I think specifically in the mortgage industry, we just went through not a correction in the marketplace, but the winds changed. So a lot of people in the mortgage industry had to be very heavily focused on refinances because rates were so low. They were just inundated. I mean, one of the largest problems that existed in the mortgage business a year ago was they couldn't find enough processing help in order to support the volume of refinances that were coming through. But if you look at the brand messaging of that, of just servicing clients, now shifting into a purchase market where the majority of the deals that are coming into the mortgage industry are coming from referral partners. It's coming from realtors, from quality relationships with financial planners, investment advisors. And having that message during the refinance boom of I support my realtors, I support my financial planners. I'm in this because our clients have a lifetime relationship with us, and this is part of your wealth plan. And a refinance fits into that, but it's part of an overall picture that you can have that conversation with your clients with. I think that's the kind of takeaway that I would take away as a mortgage professional. And you can't just be doing deals. You need to have a larger vision to your client journey and the message that you're putting into the marketplace.
Well, Chris, you bring up a really great point, and it's something that we coach to here at Clientwise, and that is for financial advisors. I think it applies to your group as well, based upon what you just shared, which is this idea of advocacy. How critical in good times, maybe in a correction period of time, in bad times, building a network of advocates, both client advocates and other professional advocates and centers of influence, is essential to success in professional services. And when you think about advocacy, you think about the people that truly understand what it is you do, people that can articulate well what it is you do, why they are in business with you, why they rely on you, what they value in you, whether they're connectors or not. These characteristics really make up what we call the advocate at Clientwise. And I think it's essential if you are in any professional service that you build a network of those other professionals. And we're seeing our advisors who may not be the advisors we coach, who may not be in the banking business, in the lending business, rely heavily on their trusted advisor advocates that they can share trust and relationship of their clients with in order to help advance their wealth strategy.
Yeah, absolutely. Okay, so everybody listen up. This is going to be an important part of the episode. So, Ray, when you coach your clients at Clientwise, you talk about having a broader vision. And chapter 4 in your book is called The Big Lie, and it focuses around, well, I'll let you tell it because you're going to tell it a whole lot better than I
It's a
am.
little tricky. Chapter 4 is called The Big Fat Lie.
Oh,
And
okay.
and you may be wondering, people are listening, what is he talking about? The big fat lie. The big fat lie is that you get into business to help others, and you're desirous to make an impact in the lives of others. You're moving beyond just in business to make money, and you're thinking about the impact that you can have. At Clientwise, we call it the ripple effect. It's how do you help not just that client, but how do you build a relationship multi-generationally? How do you help the children and the grandchildren? How do you build a team that happens? And in financial services, financial advisors are paid a fee to provide advice. And the big fat lie is, well, Mr. and Mrs. Jones, I care about you so much that I'm here to serve you. Well, until I'm not. If I become disabled or die, good luck to you. Find another advisor.
Yep.
And that's the big fat lie. We ask advisors, have you built the team? Have you built the team in an enduring way? A team that is multifaceted, is multi-generational, and a team that can serve ripple effect clients multi-generationally. And so when we're coaching advisors and our team of coaches at Clientwise are helping advisors think about their strategy, thinking about not just how do they grow their top line revenue or their profits, but how do they grow their impact multi-generationally, that's the antithesis to the big fat lie.
Yeah, absolutely. And I think, again, if you take that larger vision and that 3-year picture, that overall vision of how am I going to create a business that truly helps my clients rather than how am I going to come in and
Individually help them. That's right.
a huge pivot in thinking, because you solve problems differently when you have the mindset of I'm going to build a team to solve this problem rather than I need to solve this problem.
Well, let me give you a great example of that, Chris. We moved from New York to Dallas 3 years ago. So about a year before the pandemic. And then about 2 years ago, we moved our offices from New York to Dallas right before the pandemic began. But it was interesting because we found a realtor here in Dallas. We were coming back to the Dallas market, and we found a realtor that was going to help us. And we went through kind of a thinking about what our strategy was going to be, and whether we were going to, buy a townhome temporarily with kids coming out of college and gift them the townhome, or we were going to build a home, or maybe downsize and move into a condominium of some sort. So my wife and I had a lot of options. Fortunately, we were thinking about what was going to be best for our family. And our realtor was fabulous. She was patient. She was kind. She was thinking about not just us. She was thinking about our kids. They were still in college at the time, but they were, going to land good jobs and did. They ended up purchasing their own homes. And not only did our realtor help us, but then help us with sort of connecting to all the right trusted professionals.
Yep.
Who are the bankers we needed to know? Who are the estate attorneys we needed to know? Who were the individuals that were going to be doing an inspection on the home? What was the builder we were going to need to negotiate with to build the custom home, et cetera, et cetera, et cetera. And when my kids were ready to purchase their own home, because Rach Potter took an interest in my family, it just wasn't about a transaction for us. All of a sudden now, my kid's first call was to Rach. She built a great team. That team had a network of other professionals. They tapped into those professionals. And so now my kids aren't calling me asking for a list of contacts. They have a whole resource with which to tap into. She's building a multi-generational business. She's got, a couple of young support people that help her, and a whole team of, loan officers, depending upon, what size of loan you're thinking about or how complex the transaction might be. She's got all the right resources. And so she's thinking about impact, not about a sale.
Yep. 100%. And we call that the hub and spoke. And it's truly being the support resource for all of the different aspects. Because when people come to us and they decide that they're going to, wealth management is one side, but the mortgage tends to be pretty specific. It's either a refinance because there's a financial strategy that they're going through with a financial planner in order to leverage that, or they're looking to buy a home.
Right.
And in both of those scenarios, there's a very specific pathway that people walk down, and there are professionals at each milestone along that process. And so looking at your business of, I'm just going to let them figure it out, and maybe they'll find the right people and maybe they won't, or taking ownership of, this is my relationship and my client, and I'm going to make sure that they have the best experience possible. So I'm going to vet a list of realtors. I'm going to vet a list of financial planners and have all of those. Now, what that allows you to do is then have a referral network of all of these professionals in all these different industries that you can all share clients back and forth. And that is fundamental to the business. I digress, but there's 3 ways to grow: past clients, referral partners, and marketing and advertising. And past clients or existing clients, book of business, and referral partners, it's the most profitable way to go about it.
Well, at Clientwise, we have taken this referral partner concept to that next level.
Hmm.
Because some individuals, they're not great referral partners. They don't want to be asked. They don't want to engage. And usually in the referral process, somebody feels uncomfortable.
Yes.
And so what we have learned among the most effective financial professionals in the industry we're focused on is that building advocacy with a select few. So my encouragement would be to those listening, just like you described, what does that network got to look like? You know, the realtor, the banker, the business valuation specialist, the business broker, the insurance lender, the financial professional. Start thinking broadly about the types of other professionals you need to tap into. And instead of going, a mile wide and an inch deep,
Yeah.
think about going, sort of an inch wide and a mile deep with each of those professionals. I would encourage the listeners, your loan officers, and those listening to the podcast, this wealth podcast, start interviewing those other professionals where you can discern whether or not they should be part of your network. Do you align and sync up on the types of clients you serve? Do you align and sync up that you're both promoting your services and growing your business? Start asking those other professionals, what distinguishes you from others in your field? And what about your profession appeals to you most? How did you get started in the profession? Where do you see your business 3 years from now? And how do you want to be framed? If I were going to recommend your firm and your services, how would you want me to frame what it is that you do and what differentiates you in your field? And the right other professional, Chris, is going to turn to you and ask, well, share with me how you want to be framed
Yeah.
and what distinguishes you from other loan officers, and how do you promote your services, and how would we work together? What types of clients do you serve? And when you can build that trusted partnership and be advocates for one another, you now can go deep
Mhm.
and serve together. That's far more effective, at least in our opinion, than building a big referral program.
I could not agree more. And those are the relationships that are fun in your business when you know the people and you like the people. Like it's always, I don't necessarily call it business when you can have them over to, Saturday night dinner with you and your wife and your kids and truly feel comfortable in that type of situation. When you get to do business with your friends, I mean, that's nirvana.
That's right, and it isn't work.
Yeah.
It's joyful.
So, Ray, knowing what you know about the industry, I get a lot of loan officers that are hesitant to reach out to financial planners because they feel awkward opening up the conversation. They don't know specifically what to talk about in order to get into the conversation of, hey, can I provide value to you? What does that look like? So do you have any tips for our listeners on the best way to approach a financial services professional?
Yeah, I think there's a couple of things that the group should probably be thinking about. The first and foremost is approaching financial professionals with a sincere curiosity about their business,
Hmm.
and be sure and do a little research ahead of time. Check out their website. There's something called Broker Check. You can go on FINRA's website if you just do a little Google search called Broker Check. Pull up their profile. You'll see what firms they've been with, what their length of service is, what licenses they hold, what states they're registered in. And there's a really good public database of information. It'll also tell you if they've got disclosures where they've been sued, and what kind of business they run, how they charge for fees. If you look at the bottom of most independent advisor websites, RIAs, registered investment advisors, and independent advisors, you'll notice on the bottom of the websites, there's something called an ADV. And you can click on the ADV. And in addition to the broker check, the ADV that appears on the bottom of the websites will tell you a lot about the fees they charge, the types of clients they serve. So if you're really interested in building a relationship with an advisor, I would not show up with a yellow pad and say, hey, Chris, tell me about your business. I might approach it and say, hey, in doing some research, I've noticed the fees you charge, the assets you have under advisement or under management, the types of clients you serve is very much in alignment with the types of clients we serve. Would you be open to a larger conversation and explore how your clients might benefit from the work we do and how our clients might benefit from the work that you do? And not approach it as a quid pro quo, but approach it as an impact statement. How can we help each other in a way that benefits others? And I've learned a long time ago that if you help other people get what they want, you will likely achieve what it is you want. So first and foremost, I say do some research. Second, approach the conversation with a sense of authenticity about making an impact for each other. And then the third thing I'd be really curious about is whether the advisor and advisory firm is really interested in growing their client roster or not. If the firm is multi-member owned, where there's more than just a sole owner, they've brought in the next gen, they've sold an equity stake to a second, third, or fourth person, or maybe they're a larger firm and they've got multiple members that own in the firm, they're probably in a position where growth matters.
Yeah.
If they're a solopreneur where they don't have a big team, and they're 50, 55, 60 years of age, they're probably living the big fat lie. Buy them a copy of You've Been Framed. I'll sign it and deliver it. No, I'm kidding. But all kidding aside, they may not be in growth mode. They may not be looking for new clients. They actually may be looking for team members to join their firm to help them transition the business so their clients can be well cared for. So I think you've got to really understand the type of professional that you're approaching and whether they're in growth mode or not.
That is incredibly valuable. Man, thank you for sharing that, because again, speaking the language and going in from that service-based mentality, it reframes the entire conversation. It makes it so that from the very beginning, it's a partnership type, not, hey, can you send me some deals? It's let's work together and make sure we're a great fit.
Always that first, and it'll lead to much more. I would also, it's if we're going to have an honest conversation, Chris, how many loan officers do you know get framed with a more of a transaction mindset, not a partnership mindset?
Oh,
and right, all the time. So you've got to debunk that framing. In fact, the listeners might even approach a financial advisor and say very plainly, hey, you might frame other loan officers like me as very transactional, but I actually don't approach the business that way. We work with clients for decades. We've got clients that we serve in their second, third, fourth transaction, but we work with people to help them solve problems, not just get deals done.
Yeah. That's absolutely. And so from the mindset of the wealth advisor, where do you find, what do you think the most value is of a partnership with a loan officer?
Yeah, great question. I think when a financial advisor is building a wealth strategy or a wealth plan with clients, it is a plan that begins, at least the best in the business, with a durable financial plan that has modeled a series of outcomes. In financial services, they're called Monte Carlo simulations, where they stress test investment portfolios against what the client's goals and outcomes are. And so financial advisors are, the good ones, are not just managing investment portfolios, but they're also managing and helping clients navigate what it is they're trying to accomplish. And oftentimes that extends to needing to know good realtors, good bankers, if they own businesses, good business valuation specialists, and good business brokers. And so the financial advisor would work well with a loan officer who is committed to being in service and helping their clients, achieve outcomes with ease. And when I think of the financial advisors that work best with others, they've really built something, a close relationship where they've really understood each other's client rosters, their ideal client types, the niches, the markets with which they're best in service to. Working with a mass affluent client is very different than working with a high net worth client, which is very different than working with an ultra high net worth client. access to capital varies at the different types of affluence. And so understanding the types of advisors and the types of clients they serve, the more that your constituency, those listening into today's podcast, really think about the types of clients they're in the best position to serve and approach the advisors that way, match up and sync up on that niche, on that ideal client profile, and demonstrate to the financial advisor that you want to partner with how you are best in service to those individuals and what separates your service and process from all others. I think that's how you connect deeply.
I could not agree more. And if you really think about that, the client is the one who's at that decision. Let's find out who we can help the best and then find the strategic partners that can help us help as many of those people as possible.
Right on.
Makes sense. Well, Ray, I thank you again so much for your time, for being here. I do have one final question.
Yeah, sure.
So at Clientwise, you have kind of a framework that you walk your clients through. And although you built it for wealth managers, it's directly applicable to the mortgage industry and how they look at their business. So could you take a little bit of time and just kind of walk us through how you approach business growth?
Sure. So it's interesting. Barron's, Dow Jones. If your listeners read, and I would highly recommend every Saturday, the Barron's newspaper, you'll learn a lot. Barron's actually selected our firm as their exclusive advisor coaching partner.
No way.
Barron's, yeah. So Barron's ranks the top 1,200 advisors in the U.S. And in fact, you might go on to barrons.com, check out those rankings. That'll tell you state by state by state who are the top ranked financial advisors in the U.S. And in fact, my friends at Barron's call this piece of research and content that we've created the 7-part roadmap for practice management growth. Back 17 years ago, I built a database of every registered rep and RIA in the United States. And we started segmenting advisors into some buckets: revenue growth, those that were generating more than $3.5 million in revenues, those advisors that had at least $250 million in assets under management, and advisors that had been in the business for 10 years or more. And we started with phone interviews. We then started moving on and doing online surveys. And then we physically went out and met with more than 500 advisors. Wow. And we just started learning, how are they structuring their practices? How are they structuring their business? And out of that, we created something called the Clientwise professional advisory model. It's what you're referencing that would probably be a pretty good overlay for any of those listening in today's podcast. But what we came up with was there were patterns, 7 specific areas that we noticed the best in financial advising were doing to run their teams. There was if you think about a wheel, kind of like a clock, at the 12 o'clock position, there was something we identified called organizing priorities, having a clear vision. We talked about that in today's podcast. What do you have for the vision of your business? What are the priorities that matter most? What are the objectives that you're focused on achieving? And what are the key results that you'll manage? Then there was a second position as you move clockwise around the wheel was something called the client engagement model. What was the highest form of client service and client experience that you could create to engage clients deeply? And the highest form of client engagement we identified was this client advocacy, a very subset of clients who were introducing not just their friends and family, but those in their network to the financial advisors. The third position, as you moved around the wheel, was client acquisition strategy. Best in the business were growing, and they were looking for new clients to bring into their firm that fit their ideal client profile. There was a marketing approach, which was the fourth position. All things related to marketing, the web, all digital, all print, marketing strategy, content creation, developing blog posts and blog articles and search engine optimization, videos, and the like. There was team development. Every one of these businesses were a top team. There was a professional advocate network meaning, and we talked about that earlier in today's podcast, just the network of other professionals and partnering with them. And then the last, they were building real businesses, real ensembles, real teams. And therefore, there was a business and operations management, which included the operations, the finance, the technology, the human capital, and the compliance. So there was this idea that if you were focused on growth in each of these 7 areas, you were thinking about innovation in each of these areas and building a team of leaders who could capably run each of these 7 areas, that you could really scale up a firm and build something that was enduring. And so we use this as a Dewey Decimal System, if you will, in terms of our research and all the content that we create at Clientwise for financial professionals.
That is amazing. And even just in walking through that, so many nuggets and gems of there's going to be blind spots for so many people on the episode of just one of those areas where we need to be taking the time to work on the business, not in the business, and making sure that you're building a structure that can withstand a little bit of market up and downs, but ultimately gives you control and power to achieve whatever it is that you're looking to do. And you're not just stuck working, processing deals every single day. That's incredibly valuable.
No doubt. Every financial professional that we coach, we recommend they take time out each week to work on the business and to set yourself up with 12-week sprints. Now is a really good time to be thinking not just about the year ahead in your planning, but think about the first 12 months of the year. If you finish strong, you start strong. So goes the first quarter, so goes the year. So you got to get out of the gates strong. And so put 12 weeks together of the right kind of activity. You can't focus everywhere. So really be specific about measuring the efficacy of what it is you choose to focus on, and just run 4 12-week sprints for 2023.
I love that. When you're coaching at Clientwise and your coaches are working with your clients, do you have a daily plan that kind of takes that high level conceptual and brings it down to, okay, you're going to focus an hour or 2 hours a day on just these focused activities?
We don't. We are big believers in the coaching work that we do that aligns with the International Coach Federation. So our job is to coach others so they become great self-coaches. We are not in the training sort of space where we're so specific. We want to help our clients to create a great sense of self-awareness and to create their own systems and structures that work for them, and not be so prescriptive that we sort of box people into our way of doing things. We want our clients to develop their own systems and processes and methods so they can continue on well past the coaching work they do with our firm.
Oh, that is brilliant. Ray, so valuable. Again, thank you so much for being so generous with your time today. If people want to find out more about you and connect with you, or find out more about the book, the organization, where would you like people to go to get more information about you?
Yeah, just head to clientwise.com. And if you know any good financial advisors that are looking to scale up their team, let them know about our Business Builders Academy. We bring groups of financial advisors together every 90 days. So you can learn more about that there. And you'll find my book, You've Been Framed, on Amazon.
That is fantastic. And everybody, thank you again for listening. And don't forget to head on over to iTunes, hit us up with a 5-star rating and review. That helps us get more incredible guests like Ray on the show. And I'm looking forward to seeing you in the next episode.